Hickey, we're looking at new intraday record highs here on the S&P 500, capping off a banner month. What would you tell investors about whether it can continue?
I think this kind of momentum that we've seen, it's, people I've heard on your show, on your network today, talking about Tesla. And like, if you want to get in front of that and try and short that stock ahead into this momentum, good luck. We've seen similar with the NASDAQ 100. This year, it's had the highest winning percentage of up days in a year through August in the index's history going back to 1985. S&P 500, the Spider ETF, had more positive days this month as a percentage of total trading days than any other month in its history going back to the early 1990s. And what's really amazing about that is, to Mike's point, the themes of this month are reinforcing the recent themes, is that more than half of all trading days this month have had negative breadth. So we have all these, the divergences in performance, very strong at the index level. At the individual stock level, not quite as strong. So I think you do have some divergences, but it's not nearly as wide of a breadth divergence as we've seen during other periods ahead of major market turning points. So I don't think it's a major worry at this point by any means.
I think it's the market's posted gains in all but 4 trading days for the month of August. Unbelievable. Let's talk more about, you mentioned Tesla. Apple and Tesla are both hitting record highs today, both wrapping up their first day of trading after their stock splits took effect. Apple, which first announced its 4-for-1 split back on July 31st, is up 35% since then. Tesla's up more than 75% since it announced its 5-for-1 split on August 11th. Apple came out with better earnings so people were saying that had to do with it. Paul, what has history showed us about the splitters and how long this can have a positive impact? People like analysts, Mike Santoli, everybody, it doesn't add value, but apparently it adds some momentum.
Yeah, I mean, Tesla, $188 billion in market cap since it's announced its stock split earlier in August. Apple's added $500 billion in market cap. Granted, like you said, Apple had a very strong earnings report to coincide with that. So there's other factors at work with Apple. But with Tesla, there's really not much news in that span besides the stock split. What you have seen historically is that you tend to see stocks that announce stock splits do well from the time the split is announced till the split takes effect. Once the split takes effect, you tend to see the outperformance wane. So in the last 5 years, the 25 stocks in the S&P 500 that have split their stocks, once the split took effect, over the next 3, 6, and 12 months, the stock outperformed the S&P 500 less than half the time. So, we've seen outperformance by Apple and Tesla in spades over the last couple of weeks. History would suggest that you're not going to see that kind of outperformance going forward. But again, that's just the historical context here. And these stocks are just monsters on their own right now.
Do you think?
Go ahead.
Do you think it might spur more stock splits because these ones clearly, at least on the surface, appear successful?
Yeah, I think fundamentally a stock split means nothing. A CEO with a high share price right now is looking at Tesla or Apple and thinking to themselves, hey, why not split our stocks right now? It seems to be helping, and most CEOs are compensated according to stock performance. It's only an added incentive to increase splits. We have the average share price of S&P 500 stocks at a record high, and splits have been almost non-existent the last few years. So it wouldn't surprise us to see an uptick in the number of stock split announcements, since we have so many stocks at high triple digits and even 4-digit values or share prices right now.